Hi traders, welcome to another video. I'm Kayong from Alpha Play Chief Currency Strategist. For those who are new, alright, welcome to this video. What we'd like to do is to quickly walk you through, what we usually do over here on the weekly basis, and sometimes I'll do release more video within the week itself. Alright, so for each of this video, basically what we share is educational aspects of trading, alright, some of my thought process, some of our insights. At the same time, sometimes we do publish market analysis kind of video as well. Alright, so if you are very new and you just came across this video and our channel for the first time, do subscribe to the YouTube channel so that when we release new videos in the future, you'll be notified as well. And for those who have been following us for some time, really thank you for your support. For this video, the purpose I'm doing this is because I received some questions, alright, from traders over the past few days, alright, asking me how do we deal with certain scenarios and situations in the market. And I thought the best way to actually educate and value add majority of the traders, the community itself, is to record and publish a video, right, so that everyone will benefit from it. But before I go into tackling those topic and questions that you guys have, let me first share with you one of our best trade ideas of the week itself. Alright, and that's no other than euro dollar. Alright, the title here that I published this idea was cornering both sides of the market. Alright, so for those who have very active in trading, alright, meaning every day you look out into the market and such, do follow us on TradingView because moving forward I'll be publishing ideas on a daily basis, so you get updated on what are some of the market's potential setups that you can look out for as well. Alright, so this one was published 3 days ago, alright, within this week itself. So the title, cornering both sides of the market, basically this is actually the beauty of advanced pattern, alright, especially when price is in a consolidation in a range environment. We do see these patterns forming very nicely, and we are able to use this pattern, alright, to capture the top of the range as well as the bottom of the range and take opportunity of this trades itself. So if I click onto the play button, alright, we can see how this market play out very nicely. Alright, with the bearish pattern completing, alright, it moved all the way down towards the bottom to complete the other pattern, and then it bounces off nicely after that. Alright, so this is no doubt one of the best trade ideas of the week, alright. Basically what I want to pick it up is to share with you that these ideas actually work out, alright, but do not get fooled that it's 100% guaranteed sure win kind of thing. It's just how well you manage your risk. Alright, so with that aside, let me go over to the topic and some of the questions that are being asked so that we can address them across this video itself. Alright, so the first question that I received from trader is that he's asking me about the double top, double bottom divergence setup, alright? If we identify a setup and then price continue moving higher or lower, how do we deal with it? Alright, so for those who are not familiar with this trading strategy, look out for the link below, alright? Basically, I have a video that explains more in depth into this strategy, but this video itself, to keep it short, alright, not too lengthy, I wouldn't walk through the full steps and details of the strategy, but I'll just walk you through, the situation and the scenario of how we deal with this kind. Alright, so because of the divergence part of this strategy, of course, the first and most important thing is we need to have a divergence on RSI indicator as well as our price action. Alright, so over here, what we see is we do have a divergence, alright. Price has formed a double bottom in a way, alright, in terms of price action, and in terms of RSI, we do see it forming a higher low, alright, it forms a higher low. So what is happening over here is that we do have a divergence, alright, and as our rule mentioned, price has to break above the neckline before we look for any potential setup, alright, and the potential setup comes in at the 61.8, alright. So if I pull in all my tools, coming in at the 618. Right, so when price break our neckline, we are waiting for price to retrace to the 61.8. But what we see over here is that price, instead of retracing, right, it simply moves sideways, and then after that it breach higher. Right, so the question from this trader is, if this happened, alright, how do we deal with it? Is this trade still valid? how are we going to look out for a new potential setup, or this whole idea is being scrapped. Okay, so the rules is very simple. Okay, so let me pull in another fib level, which is the 38.2, right? So the rule is very simple. If price didn't retrace 38.2 but simply move sideways, all right, basically what it means is that price didn't come in to touch the 38.2 before going higher. Okay, what we can do is we continue following the new high of price and pull our Fibonacci higher. All right, so what happens is that our entry point, our interest point, all right, of 618 continue to move higher as well. All right, so initially our entry is around here. All right, with this development, we'll shift our entry higher as well. All right, and if you look at this, price continue to move sideways, make a slight dip in terms of retracement, but never really touch the 38.2, and then it breached higher. So what we're going to do is we continue to shift this higher. All right, so up to now, you can see that after that, price comes down with a deeper retracement and touches the 382 retracement without touching our 61.8. So when this happened, right, this trade idea is scrapped, meaning it's no longer valid. All right, so what we do is we simply delete and clear our chart and look out for another potential entry. All right, so hopefully that this illustration to you can clarify certain questions regarding how to deal with these scenarios when you face with such market condition. All right, the next one I will walk you through is Aussie dollar. All right, it's not a question on this, but it's more of a market analysis, and I would like to share with you the beauty of really preparing yourself for the trade itself before it takes place, and then you know the how to respond to the market instead of reacting to it. Alright, so having said that, I want you to focus on the thought process instead of just, where should I enter, where is my entry, where's my take profit. I want you to focus on the process of which we analyze the market. Right, so the first thing you want to take a look is what is happening and what is the market currently doing, what is price doing. Alright, so what you're seeing over here is price is moving in a very choppy environment, right? It moves down, it moves up, it moves down, it moves up. If you go over to a higher time frame, you see that it's actually in a pretty rangy environment. It's a consolidation, and that's where we identify a lot of kind of advanced patterns formation. Alright, and the first thing you want to do is with patterns. Again, I won't walk you through the details of this strategy, because we have another video introduction to harmonic patterns. If you're not familiar with that strategy, do watch that video. Alright, but this one I really want to share with you our thought process going into the market itself. Alright, so over here we do identify that we have a potential pattern, right? Basically a W shape is forming, and if we measure our fib, we do have a potential Gartley pattern. Alright, I won't go through each individual steps itself, because then the video will be very lengthy. But I'll show you, where the pattern completes, and then I'll walk you through what is interesting about this particular pair. Alright, so over here we do have a potential Gartley pattern forming. Alright, the completion is just slightly missed. Alright, but not to worry, alright, because if it missed, basically means, let it go, don't chase with price, alright, don't chase against the price itself. But we do have a potential bearish setup over here. But at the same time, if you zoom up our scale and look at it at a bigger picture, right, and we measure all our Fibonacci rules and criteria, we do have another potential pattern, right, coming in at the 7-7 as well, alright, and the pattern is over here. Alright, basically it's a bigger pattern. Alright, let me just quickly change the color. Turn it to blue. Alright, so we have a small pattern and a big pattern. Alright, I wouldn't walk through with you how we deal with this over here. Alright, but I just want to walk you through, the thought process of multiple setups happening. Alright, so the first setup is actually the smaller Gartley pattern. Alright, so should price comes back up and touches the 7650 level, alright, the area itself, that's where we have a potential sell pattern based on this Gartley pattern. Alright, the other one, of course, is a bigger bad pattern. Alright, should price retrace further upwards all the way to 7.7, that's another sell opportunity based on the bearish bet. But for those who are familiar with Scott Cartney's BAM theory, alright, he did mention in the book that should price breaks above the 50% retracement of your bet pattern, there's a high probability that price is gonna be attracted like a magnet towards the completion of your bet pattern, which is your 88.6 retracement. Alright, so over here, simply by looking at this, we do have various strategies, various trade opportunities coming in play. Right, the first one is we take this short based on the Gartley pattern. Alright, and if our trade stop out, that means price move higher, alright, we hit our stop loss for this Gartley pattern. We have another potential entry to enter a long setup, alright, based on the BAM theory, and then riding the wave upwards towards the completion of the bet pattern. Alright, take profit out of our BAM setup and enter on a bearish bet pattern. Alright, so in the market, alright, when you are well prepared, alright, opportunities come knocking on you. Right, so the thing is, traders tend to have the impression that, you know, if you only look at maybe higher time frame like H1, and if you only look at few trades, currency pairs, you know, maybe 5 or 6 currency pairs, you don't really get opportunities in the market to trade. Actually, that's not the scenario, right? That's not true at all. Alright, because simply by sharing with you, alright, on a daily basis, I'm only looking at about 5 to 6 currency pairs for my day trading, simply based on H1 time frame. We do identify multiple setups that we can monitor across the day and across the week itself. And by sharing with you this idea, right, this single currency pair itself, we already have 3 potential trade setups lying and waiting for us. Alright, so the myth about, you know, only looking at few currency pairs and only looking at one time frame doesn't give you any opportunities to trade the market is actually not true itself. Alright, so you need to be very cautious when you tend to shift towards various time frame, you know, going down to lower time frame, going up to higher time frame to identify trading opportunities. The challenge in doing that is that you tend not to be consistent in the way you trade. And because of that, it's gonna do you more harm than benefit you over across a period of time. So my suggestion to you is really focus on the keyword called consistency. You know, consistency doesn't only come in the strategies that you apply, but it's really in terms of the details, like, you know, how many currency pairs you are looking at, what are some of your portfolio that you are looking at, what is the time frame that you are looking at, what are the time of the day that you are monitoring the market and trading the market. All this build up to your consistency, right? So that's very important if you really want to be a very consistent, profitable trader. Alright, so this is one example to show you that within one currency itself, within one time frame itself, we do have multiple setups. Alright, I want to bring you through to another example. Alright, on Euro Yen. Alright, it's slightly different, but it's also showing you how if you follow closely a certain portfolio, right? By following the daily movement of the currency itself, you'll be able to really follow through the story and the narrative of all this currency pair movement. Alright, so for this, we do have already a completed sharp pattern. Alright, our price has hit, and then you can see price action nicely rejected off that level. And if you have traded this, you have already been profited from this pattern itself. Alright, and for those again, to get all this update, do follow us on TradingView so that you get notified whenever I publish a new idea itself. But what I want to walk you through is, you know, how we analyze and follow through the market is that when one trade has been completed, we don't stop there. Alright, so what we do is we want to follow through the market consistently on a daily basis. Alright, so what we do is if you follow it nicely, alright, what we have over here is actually another potential pattern setting up. And of course, this is also another potential trade that you can monitor should price completes up over that. Alright, and this is a potential cipher pattern. Alright, completing at the 786, which is around the 113.7 region. Alright, so what I want to show you is what we are looking over here is that price is currently in a range environment. Alright, no doubt about it, and you can see a lot of choppy movement and such. So this is where your advanced price patterns perform. Alright, they do very well when price is currently bouncing up and down, up and down. Alright, so we catch the low of the range, and then when it goes up to the high of the range, we do catch another pattern as well. Alright, so this is another setup that just sharing with you. Alright, the entry area will be around the 113.7. Alright, what we do is we want to see a nice rejection of this region. Alright, and then enter on price action itself. Alright, so this trade setup is to illustrate to you again, when you are trading, alright, don't stop when a trade is completed. Basically means that, you know, when you get stop out from the market, alright, don't give up, don't just stop there. Of course, the same applies to if you have just profited from a trade. Don't just stop there. Continue your analysis process. Make it into a consistent kind of habit to always monitor the market and look out for opportunities. All right. And then you get tons of opportunities in the market itself just by simply monitoring the few currency pairs. All right. The next one I want to share with you is dollar yen. Alright, again, multiple setups, multiple potentials that you can take from the market itself. If you look at this, again, what it's doing is currently in a very tight consolidation. Alright, for those who are trading normal chart pattern, you are seeing right now what's happening is actually in a consolidation, alright, in a triangle. And of course, traders will wait for the breakout to trade it. Alright, but over here we don't trade this charts pattern. But what we do is when market is ranging, we do trade on advanced price pattern. Alright, so what I want to share with you is we do have again multiple setups happening over here. Alright, the first one, if I pull this in, alright, quickly, you actually see price comes in at 618. So later on we do have a godly potential formation. Alright. So your godly pattern looks this. Right, X to A to B, B to C, C to D. Alright, so it completes around the 100.80 level. Alright, so that's one potential area to look out for a completion of this pattern. Alright, another pattern that's completing, alright, or I wouldn't say completing, but another potential one is actually over here. Let me just drop it into check. 618. Right, we have another godly pattern forming as well at the bottom. Okay, let me just draw it in. Okay, we change it to this color. Alright, over here as well. Okay, let me just quickly change this. I think this one is more ideal. Wait, 50. Yep. Okay, so this trade pattern will be more ideal if it's oh wait, did I do something wrong? Okay, this trade pattern will be more ideal if it's actually a bad pattern. Alright, why do I say that is because which is the same, right? But why do I take a bad pattern? It's because usually bad pattern, the risk to reward is higher. Alright, so that's why I would prefer a bad pattern more than any other patterns itself. Alright, so your bad pattern would look something like this. Alright, so again, I want to share with you over at this example or this trade idea is to show you that it's not that we are lacking opportunities to trade, alright, but a lot of times traders lose money or they can't really profit from the currency market. It's because they tend to be too eager, right? They can't control their emotions of fear and greed going into the market itself. Right, again, I just want to show you one currency pair, one time frame. You have two trade opportunities that you can take already. Alright, so should price go higher towards the 100.8 region, look out for a short opportunity, and if price decide to go lower towards the 99.6 region, that's another long opportunity that you can look out for. Okay, but what I want to share with you is yes, all these strategies are simply based on technical, and you can see that there are multiple setups going in already. Alright, but if you are trading currency markets, you cannot deny the fact that you need to also understand what is happening fundamentally, what are some of the risk events, some of the economic news that's going to release during this particular trading session. Right, and that's very important because at the end, right, your charts don't move the price of the market, but it's really the fundamental, the economic sentiment what certain central bankers say, that's gonna move the market, and that's very important for you to keep yourself updated as to what are some of the events that's gonna happen. All right, and of course, this you have multiple free resources that you can tap onto. The first one is actually Forex Factory. All right, just go over to the calendar tab. All right, you can set your settings towards your local time. All right, over here in Singapore, we know that on Friday, all right, we do have Yellen's speech coming in later, and then of course Friday, Saturday, Sunday, we do have Jackson Hole Symposium as well. All right, so the importance of all this event is that traders will look for clues and even certain hints as to whether the Fed, whether Yellen will drop certain ideas as to will the Fed still increase its interest rate in 2016, all right, and whether overall is the Fed more hawkish or more dovish, because all this will naturally move your currency market. All right, so you need to take note of all these things as well. All right, so hopefully with that explanation, this video itself, you'll be able to better understand our insights, our thought process approaching the market itself. So I'd just like to share with you some platforms that you can stay connected with us. The first one is actually TradingView. All right, if you're more active in trading the currency market on a daily basis, all right, do follow us on this platform. My username is over here. All right, when you have any questions and such, I post trade ideas almost on a daily basis, and if you have any questions, feel free to comment on those charts. I do reply to all of them. All right, but of course, depending on my time available, I won't be doing it instantly all the time. All right, but as best as I can, I'll answer all those questions that you guys posted. All right, the other thing I want to share with you is we are currently relaunching our new, I would say, beginners Forex courses. Right, the idea here is because a lot of students are asking us, how to start, where can I start trading the currency market, right? So what we decided is to relaunch our beginner classes. All right, and this is targeted towards traders who would like to traders who would like to understand what the market is about. How do you kickstart? You get lost, not sure where to start. How can you kickstart your journey? These courses will be for you, and also these courses will be for those who already started in trading the currency market. All right, but would like to have a proper recap to strengthen your foundation. All right, because we feel that a lot of times traders out there, they do not really understand the basic foundation of trading before they jump into various technical strategies, starting trading, etc. But it's very important to have your foundation strongly established, so that in the future when you want to learn this kind of strategy or the other kind of strategy, it becomes very easy for you. All right, and of course, having said that, the foundation of anything is the most important one, right? And that's where your risk management comes in, your trading psychology comes in, your money management comes in, right? So all this will be covered within this courses itself, this 1 day course itself. So what you'll be getting in this 1 day course is basically on top of a full day workshop together with us. You also be getting a one-to-one 30 minutes consultation. This is a session where you can ask us any questions, all right? And it's also for us mentors to actually assess what are your trading style, what are your risk appetite, etc., so that we can actually give you a proper plan that's more catered towards your personality. And of course, during this workshop, you also be given this tool to help you identify the highest probability trade setups. Basically, is an indicator on MT4. All right, to help you identify what are the key support and resistance, supply and demand areas. All right, so what we are doing right now is we're running a promotion for a limited time, and we are charging only at 97 Singapore dollars. All right, for this 1 day full workshop plus the 30 minutes consultation as well as the indicator, all inclusive of this. All right, but of course, for those who are overseas, we'll be doing up an online version of it. But right now, this workshop is only catering for those who are physically in Singapore. All right, so with that, again, I would like to remind you that there are key risk events happening over here. Not over here, sorry. Over in the US, all right, where Yellen is going to talk about certain things. All right, so when you are trading tonight, all right, do be very cautious of that. And again, always follow according to your trading plan and manage your risk well. With that, I'll talk to you soon, and I'll see you in the next video.